Hello everyone and welcome to this episode of Ignition Time. I'm going to explore whether we are set for a stock market crash in 2025. Thank you everyone for watching this video. My name is Dr. Chhoda with Ignition Time. I hope you had a wonderful Thanksgiving and I want to wish you happy holidays and I hope you have a fantastic end to this rather eventful year and a fabulous year in 2025. And I'm going to make sure that you have a fantastic year in 2025. Right now, the US stock market is at an all-time high. In fact, UBS, which is a bank and a financial firm, has predicted that the S&P 500 will reach 6,400 in 2025, which is up another 9% from where we are right now. I can tell you folks that all the banks, all the financial institutions, all the big hedge funds, all the big players have already made their money. If anything, we are likely to see a correction, potentially even a crash in the stock market in 2025 because stocks are significantly overvalued right now. Everything is extremely expensive. In fact, if you take the combined price of all the stocks in the stock market, they are 1.7 times the US gross domestic product. Basically, what this means is stocks are very, very expensive right now. We also know that President-elect Trump has started to institute tariffs against Canada, against Mexico, threats of tariffs against China. This does have the potential to raise inflation. This does have the potential to raise costs for all of us. And that in turn could result in a significant correction in the stock market. So I want you to know that the chances of a correction in the stock market are significantly higher. And if you're wondering, hey, what should I do with some savings I have right now? Should I buy crypto? Should I invest in stocks? My advice to you is, first of all, watch all the videos on this channel because I'm starting to get into more and more of how you should invest your money in 2025. But my advice would be to consider buying rental properties, whether it's in your area, whether it's in another state, whether you can do your research and start looking into rental properties. But rental properties have a significant number of tax advantages. Any mortgage interest you pay on a rental property is 100% tax deductible, for instance. But again, we'll cover that in more detail in upcoming videos. Right now, I want you to know that the stock market is at an all-time high and the chances of a significant correction in the stock market are also high at this point in time. So let's explore how different factors can potentially lead to a stock market crash. The first is stubborn inflation. Now, let's be clear. If inflation starts to come down, if things start to become less expensive, and it's really a matter of supply versus demand, I've covered that in other videos, and if gas prices don't go up, it's quite likely that we as consumers will continue spending, which is a good thing for the economy. We'll keep buying new phones, we'll keep buying new computers, we'll keep buying new cars. And this in turn will lead to more profits for these companies, which will lead to an increase in the share price of these companies. But if inflation picks up, which by the way is very likely with some of President Trump's policies, if Mexico decides to impose tariffs on goods coming in from the United States, if Canada decides to do that, it becomes a trade war where basically both countries start imposing tariffs. In other words, the stuff we send to Mexico becomes more expensive for those in Mexico, and the stuff that Mexico sends to us starts to become more expensive for us because of tariffs. If that starts to happen, consumers will now not have enough money to spend because all these increased prices will be passed on to consumers. So if there is inflation as a result of President Trump's policies, that could lead to reduced spending from us, which in turn will lead to reduced profits for these companies, which then will lead to a reduction in the share price and potentially a collapse in the entire market because this would be a nationwide phenomenon affecting all companies. Now, there are additional factors that impact the stock market. The Federal Reserve, as you know, makes decisions about the interest rate. This is the rate at which banks borrow money from the US government, and it also determines the rates at which you borrow money from banks or your credit card interest rate. Now, if the Federal Reserve does not provide clear signals to the stock market, which they generally don't, if they don't provide clear signals to the stock market as to whether interest rates are going to go down or go up, that makes all the big players in the stock market very nervous and they are quick to sell stocks. Remember, when the stock market goes down, it goes down in a hurry. It essentially takes the elevator down, but when it goes up, it takes the stairs. It goes up slowly. So when the market crashes, it essentially capitulates, it flushes, and then it goes down really fast, and it leaves a lot of people essentially hanging. So when big players say, wait a minute, interest rates are not going down, then they start to get really nervous, and then they pull money out of the stock market. Now, if interest rates go down, all the big institutions know that they're not going to get much of a return for their holdings if they invest in US treasuries, because the US government is now paying less interest. Therefore, they essentially route the money to the stock market. So when interest rates go down, the stock market goes up, generally speaking. Another important factor is consumer anxiety. The debt that consumers have, I'm talking about credit card debt, mortgages, car loans, is over $2 trillion. And if consumers start to get anxious about spending, if inflation, which I've already talked about, combined with anxiety in the stock market because of the Federal Reserve, if those two factors start to make big players nervous, and if there's a lot of defaults by way of consumers not being able to pay their credit card bills, not being able to pay their mortgages, which, by the way, started to happen in 2008, 2009. That was a financial crisis. It happened very quickly, and it was a devastating ripple effect throughout the entire US economy. If that starts to happen, things can unwind very, very quickly. Again, the thing about the stock market is it goes up gradually, but when it comes down in a flash. And you know exactly what I'm talking about, because I know many of us, including myself, have been there. When stocks go down, they go down really fast. Now, you'll have a lot of people tell you, well, you got to be in the stock market for 5 years, 10 years, 15 years. That's not true. If you time your entry into the stock market correctly, you should be able to significantly increase your wealth in 2 or 3 years. But this is not the right time to buy, because everything is at an all-time high. And remember, at this point in time, if you're getting in, you're already late to the party. If you have some money, my recommendation would be to save it. Start looking into investing in rental properties. Look at the value of rental properties in your neighborhood. Look at how much rent you can get. I'll start to discuss this in more detail in upcoming videos. But in general, your rent should be approximately 1% of the value of the property. So if you're buying a property for $200,000 and you're putting 25% down to buy the property, your rent should be close to $2,000. That's not always easy to achieve, especially in the Northeast and in the West Coast. I'm in New Jersey. There's no way I can buy a $500,000 home and get $5,000 a month in rent. I do that in other states, and I can get into that in future videos on our channel. Let me know if you want me to talk about that. But again, please hold on to your money. There's no need to rush into the stock market at this point in time. I mean, you can, if you want to, you can do whatever you want. I'm not a financial advisor. I'm giving you my analysis of essentially the overbought nature of the current market. Thank you so much for watching, everyone. My name is Dr. Nitin Chhoda with Ignition Time. Please click like, please click subscribe, please enable notifications, and please tell your friends about our channel. My goal is to create content that helps your mind and helps your money. This channel, the Ignition Time channel, is about the country, the economy, as well as your money. My name is Dr. Nitin Chhoda. Thank you so much for watching. I appreciate you, and I'm looking forward to seeing you in the next episode of Ignition Time. Thank you. I'll talk to you soon. Take care. Bye.